Bitcoin is, you could think of it as a social network combined with money. If everybody on the planet agreed to put their money on a digital network, the Bitcoin network, and sell their gold, you would have something which had all the benefits of gold, none of the liabilities of gold. That's what's happening right now, right? That's why Bitcoin is up 300% in the last 12 months, and gold is up 15%, right? If you wanted a year when gold should have performed, a year of political instability combined with monetary expansion, this is the best year I can remember in my lifetime. When, maybe back in the 70s you had something, but in the last 20 or 30 years, this is a year when gold should have performed, but it didn't. And the reason why it didn't is because Bitcoin is digital gold. And when somebody comes along with something better than the 5,000-year-old non-technology or old technology, it replaces it. Now, why is Bitcoin better property? Well, because it's pure monetary property in cyberspace. It has no weight, therefore I can move it at the speed of light. It has no jurisdiction. Gold has to go into a vault in Manhattan or in London, and some bank, some counterparty, and some government has some control. I can't move $1 billion of gold with my head in a few seconds from one side of the planet to the other side of the planet. And so as long as you have mass and locale, the property is going to potentially be impaired. If you had $100 million and you bought land in California, the governor of California has some power over the value of the land. The government can impair the asset. If you take $100 million and you put it in gold and put it in a vault in a bank, they can impair the asset. The laws of physics impair the asset. I can't wiggle my nose and move the gold 1,000,000 times in a split second. The laws of physics control me. With Bitcoin, the government can't impair the asset so easily. The laws of physics don't impair the asset, and software engineering enhances the asset. So if I'm looking for a way to pass monetary energy, money, 30 years in the future, I have to figure out how it's not going to be impaired. And of course, that just means I want the least number of moving parts.
And in regards to the returns, absolutely. Bitcoin's returns, no comparison to gold's. But we also don't see, a 30% correction in a day on the gold front. So again, as a store of wealth for someone who wants to sleep well at night, how do you get over that? Those massive corrections that we just don't see in the gold market.
First of all, I think that the massive corrections are becoming less massive year by year, quarter by quarter, month by month. The market in Bitcoin is stabilizing as more institutions come into it. And I think we can see it over the past 12 months. Second, I think that everything that's living on this earth is volatile, and things that are dead are not volatile. And so I would much rather have a volatile 300% return than a non-volatile 15% return, or a lesser return. And there's least volatility in cash with a 0% return. So stability is stagnation, volatility is vitality. Living things are volatile. I like living things. I want to live. Life force implies volatility. It's like a Jedi mind trick to convince you should be afraid of volatility. If volatility is going to return 200% pre-tax every year for 12 years or for 10 years, and you're afraid of it, you lost 99.5% of your wealth because you're afraid of volatility. That's like, you can't raise your children in a bubble and tell them they should not. If they stay in their basement and they never leave the house and you surround them with the bubble, how are they going to grow and live and prosper?
Is there a place for both Ethereum and Bitcoin? If so, what is the material difference, real or potential, between them? I'd like to add, I also want to get your thoughts on the run-up we've seen in Ethereum here.
Bitcoin is the emerging dominant digital monetary network. If you're looking for a treasury reserve asset and you're looking for a generational store of value in lieu of gold or in lieu of any other scarce tangible property, then Bitcoin is compelling, and it's compelling because it's simple. Ethereum is a speculative asset, and it's a very ambitious technology project. It comes with a lot more complications, a lot more risk. If you have a technology portfolio and you wish to invest in a technology that has risk and complexity because you're interested in decentralized finance and all of the applications in the Ethereum blockchain, then that's an interesting thing to consider. But if you're looking for a treasury reserve asset or a long-term durable store of value, I think Bitcoin is obviously the right choice. In my opinion, the entire world has a multi-$100 trillion store of value problem, which will be solved by the dominant digital monetary network. Since Bitcoin is only 650 billion in market cap, and since there's a $200 trillion addressable market, the most obvious thing in the world is buy into the dominant digital monetary network and wait for the rest of the world to start to realize this is the solution to their problem. There's no better risk-adjusted investment idea I can see in this world right now than to buy something everybody needs that's got 95% network dominance, that is engineered specifically for that purpose.
What percentage Bitcoin does Michael recommend for your average retail investor? Does gold still have any place in a retailer's portfolio?
You know, I just can't see why anybody would buy gold. I think gold's going to be demonetized. As the generation that bought gold learns about Bitcoin, and as generational wealth moves to the technologist, I think that Bitcoin is the digital gold. Look, I've got a phrase, diversification is selling the winners to buy the losers. So what portion of your tech portfolio would you invest in Amazon versus the retailers that aren't Amazon, right? It seems like you would have lost on 15,000 retailers, made money on Amazon, and maybe broke even or made a little bit on Walmart. And what portion of your portfolio would you invest in non-Apple stock in the mobile space? And what would you invest in the other search engines instead of Google? And what would you invest in the other social networks instead of Facebook? The diversification away from the winner is diversification to the loser. So take half your portfolio, invest it in gold and get 15%, and the other half invest in Bitcoin and get 300%, and then do that 10 years running, and you pretty much destroy half your money. Like, you'll lose half your wealth.